Thank you very much, Omar, the Global Ethical Finance Initiative, as well as making finance work for Africa. Now, let's turn our attention to the sub-region, where a very exciting news came from Ghana a few weeks ago of plans by the government to raise as much as $1 billion through the sale of sustainable bonds next month. That's in July. Of course, that offer will include Africa's first social debt to fund a flagship policy that will help Ghana broaden access of the people to education and a whole lot more within that particular package. Now, the Ghana Sustainable Bond Plan is in line with other sustainability programs that are ongoing here in West Africa, which focuses on climate change and biodiversity conservation, improving access to water and sanitation, and the promotion of environmentally sound design and climate risk analysis projects and other research activities. Now, with that background, let's get our West Africa Regional Showcase started with the topic, Financing Sustainability in West Africa. Now, over the next half hour, you will hear from Dorsouma Hamndou, whose office is in charge of climate change and green growth development at the African Development Bank. And that will be followed by a high-profile panel led by Mr. Abdelkader Benbrahim, the partnership coordinator of Making Finance Work for Africa. Of course, the agency is a multi-door initiative housed at the AFDB group. Abdelkader has got a fantastic and informed panelist, and you don't want to miss that. So let's raise the curtain on this session now with a regional overview of sustainability financing in West Africa, as I have the pleasure of chatting today with Dorsouma Hamndou. I call him the sustainability man at the EFDB because he's responsible for managing a team of climate change and growth officers at the bank, and he leads EFDB's efforts on climate change in Africa, including building climate resilience and low carbon opportunities into EFDB's investment portfolio and supporting the bank's engagement on climate resilience and green growth. Dorsouma's academic background is in geography and environmental management. Please welcome Dorsouma Hamndou to this fireside chat. And I wish we were physically seated together at this time over a cup of robust coffee. Dorsouma?
Yes. Thank you. Thank you for the brilliant introduction.
Thank you. It's good to have you.
Thank you very much.
Thank you. Let's get this conversation on with you, and it will be good to start by getting an overview of sustainable green climate finance in the West African region. Give us this very quickly.
Quickly, I think before speaking about what is happening in the region, let me first say that sustainable finance is rooted into the critical issue about Africa's vulnerability to climate change. As you know, this is a continent which is the most vulnerable region in the world. As we speak, 7 out of the 10 most vulnerable countries in the world are in Africa. And this is also the continent that receives only 3% of global climate finance, despite its high level of vulnerability. Despite the challenges, we realize that there are great opportunities for Africa to transition to low carbon and climate resilient development pathways. According to AFDB's analysis, the nationally determined contributions that African countries have submitted under the Paris Agreement represent a $3 trillion investment across the continent in various sectors, including climate smart agriculture, renewable energy, energy efficiency, sustainable transport, etc. So the challenges are there, we know them, but the opportunities are also available. The cost of addressing climate change in Africa per year is about $7 to $15 billion starting last year. So if we can translate those costs into opportunities, you see that there are investment opportunities that need to be harnessed. Coming back to West Africa, the region is among the most vulnerable regions across the continent because of drought, flooding, also because of sea level rise, because most of the West African countries are by the sea. So this presents a challenge, but we believe that there are opportunities through sustainable finance. Now, let me present a quick overview of sustainable finance. What do we mean by sustainable finance? For us, currently, it is a topical issue because there is a great demand for that. We all know that countries are implementing currently 2 key frameworks, including the Sustainable Development Goals and the Paris Agreement. All of those frameworks require a significant mobilization of sustainable finance. We know that there is no internationally recognized definition of sustainable finance, but it is all about finance that goes towards activities that contribute to climate resilience and also that contribute to promoting greenhouse gas emission reductions. So we know that in the past, I think there is already over the last 20 years, there were some attempts to develop a framework for financing sustainable development goals. You recall the Addis Ababa Declaration 2022 on that. But we saw that the progress has been very slow because of the challenges in mobilizing sustainable finance. Sustainable finance could be mobilized in 2 ways, through public finance and also through private and innovative finance. There are several opportunities in both sides. To date, we see that public finance has played an important role in providing sustainable finance. But we know that public finance is very insufficient. Therefore, there is a need to unlock a private sector finance in order to contribute to sustainable finance. This includes, for instance, green bonds, also innovative finance like helping private companies to green their portfolios, as well as proposing some innovative ways of mobilizing private finance from the markets, from the financial markets, but also from the institutional investors, insurance companies, etc. Now, in West Africa, countries like Nigeria, like Senegal, like Cote d'Ivoire are already playing an important role in mobilizing sustainable finance through various instruments, like the climate funding instruments that have been established over the recent years, including the Global Environment Facility, the Green Climate Fund, the Climate Investment Funds, which are playing an important role in providing sustainable finance through sustainability projects, like projects to contribute to develop technologies on renewable energy, or a project that contribute to provide farmers with drought-tolerant crops. So there are various projects like that in the region that the FDB is already supporting. Let me give you one example. Recently, the bank has designed a very innovative project in 9 countries in the Western African countries. This is a program for integrated development and adaptation to climate change, PDAC. It is a program that helps build the resilience of those countries in mobilizing water resources, in managing better those water resources, and also providing crops that are resistant to extreme climate events in the region. This is a big program because it has mobilized, it's an example of blended finance, actually. It has mobilized both AFDB finance as well as climate funds, but also it has mobilized bilateral funds like KFW, etc. So these are innovative ways we see we can replicate in various projects and countries in West Africa in order to scale up climate finance for the region. Thank you.
Thank you, Dorsouma. In terms of what the AFDB has been able to do, how much was the size of the funding so far at this moment?
I can't give you an exact figure, but we see that it's in the order of billions. Let me just give you the example of this project I mentioned before, the PDAC. This is about 300 million US dollar project. But if you add to other projects that are already that are being implemented by AFDB in the region that have mobilized sustainable finance, there are many. If you take just a new commitment the bank has made on that area, which is, as you may know, there is this what we call the Great Green Wall Initiative. It is a big sustainability initiative to create opportunities to regreen the Sahel region and also provide, access to modern sources of energy in that region. This program itself represents a total of 14.3 billion US dollars, as of which FDB has committed to mobilize 6.5 billion US dollars. And all of those resources are from sustainable finance. This is just one big program, but there are many national and regional projects and programs that have been able to mobilize sustainable finance from FDB, but also from other development partners and also climate finance instruments.
Yes, of course, the AFDB is fully in the front line of sustainable finance on the African continent and in West Africa in particular, where it is headquartered. But again, are you seeing increasing domestic and international sustainability finance flows into the West African region? For example, the International Finance Corporation is working with the Ghanaian authorities for this green bond, $1 billion US. The USAID West Africa also has a biodiversity and climate change program. How much more of this would you like to see on the ground at the moment and moving forward? Dorsouma?
I think that it is time now to scale up all of those investments. We have seen over the last years several small projects and programs here and there in several countries, but we need to see impact. We need to see scale up. We need to see impact that can be seen in every part of the region. So we need to move from pilot projects to projects that really contribute to bigger impact for the region. So for me, I see that the region has opportunity to move towards those big impact projects. And you mentioned green bonds. That's another way of mobilizing innovative, sustainable finance. AFDB has a big green bond program. We have been able to mobilize so far a total of 2.5 billion US dollar from the green bond market. And you know that this is a market that is expanding. It is getting very, very big now. And it's time for our countries in the region to tap into this opportunity. I'm glad that Ghana is already in the process of doing that. And we, as FDB, have been speaking to the country, over the last 2-3 years on this particular dimension. We have spoken also, we have supported Nigeria because Nigeria was also interested to issue a sovereign green bond. They have a big program on green bond. And AFDB as well as World Bank are keen to support the country and other countries. Another country is Kenya. There is a big opportunity there for issuing green bond. We know that Morocco has also set a good example in doing so. So green bond is a good opportunity to mobilize scaled up climate and sustainable finance. But we should do more. We should do more. We can also use opportunities like that the private sector. There are resources available through the institutional investors. Sometimes there is this dilemma, that money is there, but there is no, bankable projects to attract those resources. On another hand, you hear that there are projects, but there is no money. But I believe that there is a common ground somewhere where it is possible to bring together those that provide resources, financial resources, and those that have projects to speak and find solutions, because I am sure opportunities are there, projects are there, but maybe they are not well structured. You know that sustainable finance resources are allocated through projects, and we need to have projects that can tick all the boxes: climate rational, green growth contribution, sustainability criteria, etc. So this is missing currently, And we believe that if countries are able to bring on the table their projects and attract those that are providing resources on the same table and have close discussion and the negotiation on those projects, there will be opportunities to mobilize those resources. And at the bank, what we are doing, we have created recently an initiative we called African Financial Alliance on Climate Change, which is aiming to exactly do that, bringing together people that have finance and people that need finance in order to speak and come to an agreement on how those resources could be attracted to invest in sustainability projects in the countries. Thank you.
You know, this is a very interesting conversation because with the AFDB being the midwife between the project initiators, whether they're sovereigns or they're private sector, and those who have the deep pockets, like some of those who are on the panel for this West Africa regional showcase at this Ethical Finance Summit for 2021, is a very great thing to have the AFDB and some of your agencies making finance work for Africa in this. But on my final question for this fireside chat, Dorsouma, is about the international sustainability standards and practices. How much more around this would you like to see around the projects on sustainability in West Africa?
I think it's those projects are good, but they have to meet certain standards, as I mentioned earlier. And one of the standards that we are very keen to see applied is, for instance, the environmental and social safeguards. You know, a project could be good in mobilizing sustainable finance, but it could make some harm to the environment or to the communities. So applying a very rigorous sustainability standards like environmental and social safeguards is very critical. We also need to make sure that the projects that contribute to sustainable development do not also contribute to increase the level of emissions in the atmosphere, because you know that the current global warming is happening because of the greenhouse gas emissions. So at the IFDB, for instance, what we do is that we screen all of our projects for climate risk and for the climate, the opportunity to reduce emissions. We have tools that we have in place. We screen projects based on those tools, so that with the projects that can be financed by AFDB or another institution, could be projects that are not going to contribute to creating other problems, other environmental and social problems. So that is important. And it is important that we mainstream climate risk and opportunities into our development interventions, and also especially into our investment decisions. For instance, we are now more interested in including a shadow carbon price in all the investment we are making, you know, so that investment are designed based on the potential to reduce greenhouse gas emission, for instance, and how much does it cost for a project to be designed based on those standards. So these are things that we are very, very aware of, and we have already started implementing them at the AFDB, and we want to closely work with our countries in the region, especially in West Africa, in order for them also to apply similar standards for their projects. And this is good for them, good for us, and it's good for the planet.
Yes, it is very good for everyone. It's good for the planet. It's good for the world. It's good for West Africa. Thank you so much, Mr. Dorsouma. Hamdou, our keynote speaker from the AFDB group. We thank you so much for those insights into financing sustainability here in the region. A region very rich in diverse natural resources and human systems, looking at how to make all of them work together for ethical finance, which is at the heart of the entire conversation. Thank you so much.
Thank you so much for the opportunity. Good luck.
Thank you very much for being part of this summit. Now, this is time to get straight to our panel discussion. And this will be led by Abdelkader Benbrahim. Benbrahim is in charge of coordinating those critical partnerships that form the backbone of making finance work for Africa. That's a specialized agency of the AFDB group. Benbrahim's work is focused on financial inclusion and positively influencing policymakers in addressing key constraints around digital finance. He also leads the Making Finance for Work for Africa's efforts in remittances and housing finance. Please welcome Abdelkader Benbrahim, the chair of the panel on financing sustainability in West Africa at this Ethical Finance 2021 Summit.
Thank you, Boason, for the introduction. And also thanks to Hamdou also for giving us this comprehensive overview on sustainable and climate finance in Africa and the various ways in which the African Development Bank is also championing the development of low carbon development in Africa. So good morning, good afternoon and evening from wherever you are. It's my great pleasure to welcome you from Abidjan, where I am based, to this Ethical Finance Summit 2021. My name is Abdelkader Benbrahim, and I'm the Partnership Coordinator for the Making Finance Work for Africa. I have to say, we're very proud this year to partner with the fantastic team from the Global Ethical Finance Initiative and also with Lotus Capital to bring this regional showcase focused on West Africa. The topic is a pressing one. And the theme for this year's summit is focused on financing a sustainable future, climate and beyond. So it is only fitting and indeed extremely pertinent that we focus the discussion on Africa and specifically also zoom in on the West Africa region. Before I introduce our distinguished group of panelists, please just allow me to share with you some thoughts about the reasons why we're having this panel. What we would really like to get out of this discussion. Of course, we've heard earlier from the African Development Bank how Africa is disproportionately vulnerable to the impact of climate change, despite having least contributed to greenhouse gas emissions. And if you look specifically at West Africa, and we've heard those examples of the extreme droughts in countries in the Sahel, or coastal degradations in West Africa, or maybe even reduction of lakes and rivers like in Chad and Niger. So all of this, of course, translates to huge GDP losses in the billions. And these are just environmental impacts and the risk of climate change. We've heard also from Hamdou earlier about how really almost all African countries have ratified the Paris Agreement by submitting their nationally determined contributions. And this means that countries will have to adapt their existing infrastructure to reduce carbon gas emissions. As you can imagine, this presents a unique challenge for Africa because of the already massive infrastructure gap. Also, there is 600 million people or so, or approximately half of the population of sub-Saharan Africa lacking basic electricity. If you look at the sectors, for example, that will be most responsible for creating jobs for the millions of young Africans entering the workforce, like the agricultural sector or manufacturing or services, they are challenged by a lack of energy, transport, and communication systems. But of course, the flip side to that is, there are huge opportunities to leapfrog this carbon-dependent infrastructure and to tap into the abundance of green resources. We've heard also earlier about, for example, the exceptional solar capacity that the West Africa region possesses. We heard, of course, about the Great Green Wall Initiative. And so, faced with this urgent and immediate development need, the financial sector has an important role to play to deliver on sustainable development goals. And this is particularly all the more important as we are making this major structural transformation to a low carbon inclusive economy, which of course, will require major investments. And we knew that, the transition to a low carbon economy was going to come with a very large cost. Of course, on top of that, now we have the fact that Africa and, the rest of the world have suffered major setbacks because of the COVID crisis. And which, according to many sources, such as the UN and the World Bank, have reversed major progress that have been achieved in social, education, and health sectors. So we really need a profound and radical transformation of the financial sector to make it more fit for its main purpose, really, and that is to serve the real economy and society. And we are seeing an unprecedented interest from the financial sector around the world, shifting to a more sustainable practices driven by laws, regulations, global initiatives. And also importantly, we're seeing more and more investors expressing the importance of integrating environmental, social, and governance elements into their decision making. In West Africa, in Africa and West Africa, of course, we're seeing sustainable finance gaining momentum, and we've heard some of that earlier from Hamdou. So this is really the background against which we want to discuss today. And there are a number of questions on how sustainable finance trends have influenced the financial sector in West Africa. What are the lessons that we can draw from the past year? Also, we will try to showcase some of the progress that has been made in sustainable finance, and not just in the climate crisis, but also looking at other social and governance related issues related to gender, for example, and financial inclusion and governance. These are all very important issues in Africa, and it's very high on the agenda. So I am most delighted that we have an excellent cast of speakers today. We will hear first from Mrs. Elsiadou Awadzi, who is the second Deputy Governor of the Bank of Ghana, and only the second woman to hold that position in the bank's 63-year history. We will also hear from Mr. Garba Mohammed, who is the Global Head of Sales at Sterling Bank. We will then hear from Jules Ngankum, who is the Group CEO of the Africa Guarantee Fund, which is a Pan-African DFI that provides financial institutions with guarantees, specifically focused on small and medium-sized enterprises. We also have with us Karima Ola, who leads Leapfrog's African Financial Services Investment Team, which is an impact investment firm that invests in high-growth financial services and healthcare companies in Africa and emerging markets. And last but not least, we will hear from Hajara Adiola, who is the Managing Director of Lotus Capital Limited, which is a Nigerian firm that is focused on Sharia-compliant asset management, private wealth management advisory services, and other financial advisory services. So welcome to all. Without further ado, I would like to invite Deputy Governor LZ for her opening remarks. Allow me just to introduce her more with a more extended bio. So, in addition to her role as the second Deputy Governor of the Central Bank of Ghana, she was also recently appointed by His Excellency President Nana Akufo-Addo as one of the 7 trustees of the COVID-19 National Trust Fund to support those at the forefront of combating the COVID crisis. Previously, Deputy Governor LZ was at the IMF as the senior counsel and also spent 2 terms as the Commissioner of Ghana's Security and Exchange Commission. Deputy Governor, I invite you to provide your opening remarks. And if you can perhaps frame it around the question of how has the trend of sustainability influenced your approach as a regulator? Deputy Governor, the floor is yours.
Thank you very much, Abdelkader. And I hope you can all hear me.
Yes, we can.
Are you able to hear me? Absolutely, great. So thank you for the opportunity, and hello to all my co-panelists. The Bank of Ghana, as a regulator of the banking sector, and by that I mean banks and other specialized deposit-taking institutions, we understand just the enormous risks that the whole climate risk conversation poses to the economy at large, as well as to the banking sector. And so for a country that is so dependent, for example, on agriculture, in particular cocoa and other tree crops, for a country that is very dependent on her ocean and as a result the fisheries sector and all of that, the mining sector, the oil and gas sector, these are key determinants of our economic growth. And so the conversation around climate risk is very real to us, being in West Africa as well and seeing just the enormous risks that these pose to macroeconomic stability, as well as the fact that banks' investments and lending to these key sectors of our economy are at great risk from climate changes and all of that. So these are some of the considerations that affect the work that we do in this area. In particular, we're very conscious of how the transition to a greener economy in Ghana can be managed in a coordinated fashion, with the banking sector playing a key role, and in particular how the transition to a greener economy also will be managed in terms of the risks that will be attendant to it. You know, how do we get banks, for example, to fund the public sector, the private sector, households in making the necessary adaptations, right, from where we are today to more greener forms of doing business? How do banks' balance sheets support this endeavor? Can banks become eligible to tap into the vast financial resources available in the green finance market around the world? So in thinking of these very critical considerations, a few years ago, the Bank of Ghana initiated a process of developing what we call the sustainable banking principles. And we did this in close cooperation with the banking industry itself, as well as the Environmental Protection Agency. So we formed a tripartite committee. We didn't want to make this a top-heavy approach. We said, well, the banking sector themselves must become aware and become interested enough in these risks. And therefore, we encourage them to work together with us to find solutions to these looming risks. So as a result of these initiatives and this cooperation, we developed the Sustainable Banking Principles, which we launched in November 2019. Basically, this is a set of 7 principles aimed at helping banks identify and manage the economic and social risks. And basically, we believe that this is a key step towards helping banks carefully manage the transition to a greener economy. So I'll be happy to talk a little bit more about this on this panel as we go along. Thank you.
Thank you very much, Deputy Governor. As always, very, very interesting that you bring, of course, your experience, from a regulatory perspective, and also highlighting your approach, engaging with the banking sector around the sustainability practices and the sustainable principles. And we should certainly, I'd like to delve on that a bit deeper later on. But first, let me now invite Garba Mohammed, who is, I mentioned, head of sales with Sterling Bank. Garba, please, I'm very keen to hear your take on how sustainability has influenced your Sterling Bank in terms of the financial products and services you're offering. We heard from Madam Deputy Governor from a regulatory perspective. It would be now interesting to hear it from a banking perspective. So please, the floor is yours.
Thank you very much, Abdelkader. I would like to say once again, good morning, good afternoon, and good evening to my fellow panelists. We are very happy to be here. And as a matter of fact, environmental risk in this world today is very real. We all know what is happening today. You hear flood there, tomorrow you hear droughts there. There must be a reason. According to the principle of sufficient reason, if something happened, there must be a sufficient explanation why that happens. So having that at the back of our mind, our strategy in the bank, embedded the process of EAI, embedded the process of taking into consideration environmental risk, social risk, and all that. In our E&S risk, we are able to classify the risk into 5, and we have also embedded and created a particular desk in our risk organization, a desk that is responsible for environmental, so we call it environmental sustainability desk. So whatever we are going to do passes through that, and an EIA report must be passed through that desk to ensure that it is in line with global best practice. Okay, let me come back initially to the ultimate strategy of the bank. In order to support sustainability in the whole world, our overall strategy is embedded, is built on tripods of specialization, digitization, and agility. The specialization, we decided to choose 5 sectors. By clearly focusing on these 5 sectors as a bank, we feel we are directly impacting positively our own quota to the global sustainability process. That is, we term it the heart of sterling. This heart of sterling involves only 5 sectors. That's the health sector. H stands for H. H stands for health. E stands for education. A stands for agriculture. R stands for renewable energy, and T stands for transportation. We believe by focusing on these 5 sectors within our own small sphere in Nigeria, we will be able to streamline and pay particular attention to how much we have impacted on financing these sectors in line with global sustainability. And as I said earlier, our risk analysts and all that are well trained in the area of assessment of EIAs. So basically, in addition to these 5, we chose 1 or 2 other sectors that we give preference, or we give incentives to customers coming for financing, incentives in the area of pricing, incentives in this area of concessions and all that. For instance, in the housing real estate projects, we have 1 or 2 projects that we are funding even at the moment, in addition to the ones we have done in the past. Okay, in against the traditional way of building, where you waste a lot of water, you waste a lot of cement, you run a lot of machinery emitting gases and all that, we have identified 1 or 2 guys around that use the sustainable way of building houses around in terms of sustainable housing and so on. I have a particular company called Abacus today in Nigeria. They use polypyrene, this preferred building methodology. So by doing that, ordinarily, our pricing ranges from 19.5 to 25%. But dealing with that, because of the sustainability nature of what they do, we brought the pricing down to 15. We know the bank has lost a lot of, leverage there, or a lot of income, but that is the simple and small way that we contribute to the growth of sustainable building. And I'm sure by the time we do a few of these, a lot of banks, a lot of people in Nigeria will adapt to that, because 1, it saves energy. 2, it saves a lot. It saves greenhouse emission. It saves water, it saves a lot of things, and also recycling of, byproduct of petroleum, whatever, and all that, rather than using, blocks and all that. So these are some of the initiatives that the bank put in place to support, the emission of greenhouse gases. And we are also looking at, even though we may lose points in aspect of financing of such ventures, but we also believe, with lower prices comes, lower income to the bank. But we have also identified, there are green credits being issued all over here and there. We trying to start counting our green points, to access, green, funding and all that all over. So basically, these are the 5 sectors that we have chosen. To show leadership in the sustainability process in Nigeria today, I think more than 70% of the branches of the bank today run on solar systems. That also helps environment. We have converted, branches, on solar. Some are using biomass, some are using biogas and all that. When we have today a particular desk of renewable energy desk, that desk only deals with renewable energy financing. And today, I can tell you, the portfolio of that desk today is in billions of naira. So, and in aspect of agriculture, all financing or all financing activities that the bank goes into, usually passes through that environmental sustainability desk. So as a matter of fact, these are some of the, initiatives embedded in the bank's strategy, embedded in the bank's policy, on ensuring that we have closely follow, sustainability and support the global, works towards sustainability. Thank you, Mr. Abdelrahim.
Thank you, Garba. And that is indeed very fascinating, the work you're doing and how sustainability is really at the core of Sterling Bank's business. And even, how you integrate different factors, environmental factors in your decision making through the strategy and policy. And also what I found interesting was the incentive to provide, particularly as it relates to pricing and other aspects as well to the different. So very, very fascinating. And, I hope, of course, other banks will follow suit as well in Nigeria. I'm sure they will. Let me now invite Jules Yankum. Jules, so as I mentioned, is the CEO of the African Guarantee Fund. He has over 15 years experience in banking, financial services, leading financial institutions. Prior to joining the African Guarantee Fund in 2013, as the financial officer, Jules Barclays Capital, various roles, including a rates trader and a treasury. Jules, I'm very keen to hear your take on how sustainability has impacted your business and in terms of course your financial products. So please, the floor is yours.
Thank you, Mr. Benbrahim. Yeah, so at ADF, we see financial sustainability through financial inclusion. So the objective of ADF is to promote financial inclusion by supporting the SMEs. So I think the first question at this stage is why the SMEs? So, the SMEs in Africa, not just in Africa, even across the world, are the engine of growth. And we believe at ADF that the main driver to reduce poverty in Africa will go through the SME. The SME today in Africa, they represent 80% of the private sector. The SME sector is the largest provider of employment, of new jobs, and we believe that the SME, they have the highest potential to reduce the gender gap in business, as they represent 90% of the new jobs that are created every year. So for ADF, the SME are the best candidate to achieve financial and social inclusion. But one of the main challenges, but the SMEs, they are facing many challenges that are the quality of infrastructure in Africa, access to market, the quality of human capital, the legal and regulatory environment, corruption, and access to finance. But amongst all those challenges, we believe that the biggest one is access to finance. And this access to finance, this is what we call the SME financing gap. And the mission of ADF, the African Guarantee Fund, is to reduce the financing gap between the financial institutions and the SME. So a study was conducted by IFC a few years ago, and that study showed that the SME financing gap in Africa is estimated to be $300 billion. And this is what ADF is trying to close or to reduce. When we started our operation, the first thing was to understand what was the driver of this SME financing gap. And then we kind of realized that this gap is a consequence of other several gaps. The main one is the information gap. This is mainly the lack of historical data on SME that they can provide to banks so that they can do a proper risk assessment. A bank, before they give a loan to an SME, they need to have an idea of what type of risk they are taking. But one of the challenges is that the SME, they don't have like the historical data over a certain period of time that they can share with the bank so that they can do a proper risk assessment. And even some of the SME, they have several accounts. One account for the regulator to avoid paying taxes, or for the taxman to avoid paying taxes, one account for the family, one account for the bank. So there, I think one of the challenges is mainly when it comes to the bookkeeping. Another gap is the resource gap. You know, we tend to see that banks in Africa, they are very liquid. But when you actually analyze the liquidity of those banks, you realize that we are talking more of a short-term liquidity. So when it comes to working capital, the banks, they are very happy to do that. But when it comes to long-term financing, most of the banks, they don't have long-term resources to be able to finance the SME. So this is where now we have a mismatch. Another gap is the collateral gap. You know, the collateral requirement for SME in Africa is extremely tough. If you want to have, if you are applying for a loan from a bank, most of the time they will ask you to provide 3 times the amount of the collateral, the amount of the loan in terms of collateral. And most of the SME today, they are not in the position where they can provide such collateral. And then you have the skill gap. The skill gap is mainly due to the fact that the SME, they cannot attract good talent. They are really struggling because they cannot afford it. You know, most of the good talent that study maybe abroad or even in Africa, they will prefer to go and work for the big company, you know, the big 4, the banks and all that. But SME is, but the problem is that the SME is not going to be part of their first choice. So those SME, they are really struggling to get good quality staff. And the last one is the perception gap. The perception gap is something that is very critical, especially in Africa. You know, SME, people believe that SME is a risky business. So you are African, you are SME, let alone when you have an SME that is managed by a woman. We say, okay, now you have 3 challenges: being an SME, being African, being a woman. So that is really a big challenge, but it's just a perception. It's just a perception. And today, this is what ADF is trying to address. So all our products were designed to address each of the gap that I mentioned earlier. So at ADF, we do have a thematic approach where we want to combine together a social return, a climate return, but also a financial return. So that's why we were able to put in place 3 specific windows: the gender window, the green window, and the COVID window, you know, like the recent news that is around COVID. So on the gender window, the plan is to be able to sustain SME today that are seeing climate challenges as a business opportunity. And we have realized that for SME in Africa, when you talk about climate, I think their problem is not to do good to nature. They really don't care. They just see climate challenges as a business opportunity. So now you have a lot of SME that are engaged in water efficiency, energy efficiency, waste management, manufacturing processes, the clean manufacturing processes. But for them, it's first of all a business opportunity. But again, those SME, they have the same issue. How do they get access to finance? And this is where risk sharing instrument in Africa is really critical to be able to support those type of SME. I mentioned the gender window. You know, in sub-Saharan Africa, we have the highest rate across the world of the female entrepreneurship. The highest rate of female entrepreneurship across the globe is in Africa, but they are facing a huge challenge: access to finance, which is really a consequence of, you know, like historical issues that we used to face. Women in most of countries in Africa, they don't have access to land. It's very difficult for them to own land. Most of the time, you know, the husband has to give his approval, but if the husband want to buy a land, the wife doesn't have to give the approval. So, you know, those type of rule that we have in most of country. And also in some country, they don't have like access to education. You know, some family, when they don't have like enough resources and they have to choose between girls and boys, who to send to school, they will prefer to send boy because the resources are limited. So yeah, at that stage, we see those parents, they will make a decision, but in the long run, those girls, they won't be able to run a business at some stage. Earlier, I talked about the perception gap. When it comes to women business, the perception gap is even wider. So, and this is the type of gap that ADF is trying to achieve. I mentioned about the COVID window. You know, the COVID pandemic is creating one of the biggest uncertainty in the financial sector in Africa. And then, you know, traditionally, the banks, they were very kind of reluctant to lend to SME. So let alone when we are in this current context. You know, at the moment, the creditworthiness of the SME has deteriorated. So most of the banks are not willing to lend to SME, mainly because of the size of the SME. You know, they are quite small, and because of that, they are very vulnerable. And that's one of the main reasons why the bank, they don't want to go there. So what we have also trying to ADF was to design a product really to address the issue that the bank will be facing during this pandemic. And that product is to support the bank to restructure the existing facility so that we can make sure that the SME will stay alive. Initially, our plan was to make sure that those SME, they will have access to more and more financing. But right now, what we are trying to do is that we don't need more financing during this COVID time. What we need is to make sure that the SME will stay alive and they will be able to maintain or to keep the existing job that they were able to create. You know, one thing that is very critical when we talk about the ethical finance, a keyword there is finance. Today, who are the provider of financing in Africa? 90% of the time are banks. So when we talk about ethical finance, the bank is a key component of that. And one of the main challenges of AGF was, how do we make sure that the bank will be part of this program? How do we make sure that we are going to convince the bank to play that role? You know, based on the discussion we had with most of the banks in the continent, they told us that they have to meet the expectation of two main stakeholders, their shareholders and the regulator. Anything else doesn't matter. The shareholders and the regulator. So even the way we design our product and the way we communicate to banks is to tell them, okay, AGF guarantee, this is what will be the impact on the profitability, because the shareholder, what they look for is mainly the profitability. And the regulator is liquidity, solvency, capital requirement. So the product were designed to make sure that we address all the challenges that the bank will be facing in terms of profitability, liquidity, solvency, capital requirement. Thanks to that, we seek for a rating. 5 years ago, we got a rating of AA-, which is the second best rating in Africa after the African Development Bank. And thanks to that, the African, most of all the commercial banks in Africa today, they can see the benefit they can get when they use AGF guarantee in terms of profitability, liquidity, and solvency. Because what we realize, you cannot go to the bank and say you have to do good because employing women is good, employing youth is good. No, you have to tell them what will be the impact on your bottom line. As soon as you can tell them exactly how what you are doing will impact their bottom line, then they are ready to follow you. And thanks to that, over the last 7 years, AGF has been able to unlock over $2 billion of financing in Africa. We've been able to support 25,000 SMEs in 45 countries in Africa. And those SMEs, they were able to create 150,000 jobs. And I will also like to take this opportunity to say thank you to the African Development Bank. They are our founding shareholders. They are our founding father. So they founded African Guarantee Fund back in 2011. And we are working together with AFDB, mainly in this gender window, the AFAWA program, where we want to unlock financing for women entrepreneurs in Africa for $3 billion. Thank you.
Thank you very much. Thank you very much, Jules, for this. You've highlighted many points here that I resonate a lot with, of course, and you've mentioned, one of the key issues of SME finance, and that is the longer-term financial resources, and that is something that we pay attention a lot in our work, actually, in making finance, trying to understand what the bottlenecks are, from a regulatory perspective, from a policy perspective, and also to be able to de-risk, and using different de-risking instruments such as guarantees as well. And it's also interesting that you've raised the topic on performance, looking at it from a social, not only social, of course, and environmental performance, but also the financial performance and the double bottom line. So yeah, I mean, I'll come back to you perhaps. I mean, you've also touched on the banking sector and really, what they are sort of focused on, and the importance of the shareholders, and of course the regulation. Maybe we'll delve on that a little bit later when we discuss in terms of your experiences there, and you did mention a lot. But now I'd like to give the floor to Karima. Karima, first of all, let me perhaps say a few words on Karima. She, as I mentioned, she's with the Leapfrog's Africa Financial Services investment team, and she has driven landmark investments, including one of the largest pension funds in Nigeria, as well as the largest insurers in Nigeria. Karima was also recently named Africa's Woman to Watch by Bloomberg. Karima was also Chief Investment Officer and a member of the board at the Africa Development Cooperation. She was also Managing Partner at Untitled Capital and Executive Director in Global Equities at HSBC. She also currently sits on the Sustainability Committee of the Africa Private Equity and Venture Capital Association. Karima, the floor is yours for the opening remarks.
My name is Karima Olu, as you've just heard, and Leapfrog. We are a private equity investment company, but we're one with a difference. We have a mission of profit with purpose, and essentially what that means is that we invest for both financial returns and for social impact. We started in 2009, and we've got and to date we've got about 1.6 billion committed in capital across Africa and Asia. As Abdelkader said earlier on, I actually I focus mainly on Africa, and in particular on financial services. So we started as a company with a view to ensuring that we partnered with entrepreneurs across the continent and leaders across the continent who were investing in goods and services that were targeted towards the underserved or the unserved. Our view is essentially that if you did target those customers, that it was indeed profitable, as well as also promoting financial inclusion. So we started with a mission for financial inclusion, with a view to then extending that into basic and necessary goods and services. So, from financial inclusion to healthcare provision currently, but also that clearly extends into access to energy, access to education, and access to infrastructure. As we start to think about climate change, I think it also becomes important that we also start to think about how, if as an investor in financial services, we can also start to make contributions towards a more sustainable economy. And that essentially, and the way that we think about it certainly is financial inclusion takes you so far, but ultimately as an investor, in order to ensure that that the underserved are included, we need to start thinking about how our investments across the continents contribute towards access to financial data points, whether that's branches or mobile money agents, or ATMs, and that how to think about how the companies we invested in, whether they're SMEs or more established banks or insurance companies, how they digitize to make the cost of access for consumers low as possible, as well as the cost of serve, so that it is sustainable and we continue to bring in more increase penetration in financial services. And then finally, the kind of issue is then once we've made kind of great inroads into financial inclusion, the question then becomes, how do we then use that to gain access to other services? One of the key things that we get from digitization, for example, is a digital ID. We also, as well as digital ID, we also get electronic KYC and many ways of investing across the board. As Leapfrog, to date we've invested in a mix of digital disruptors who clearly have found a way to serve the underserved and the unserved at a cost that makes it sustainable. And then we've also invested in what you would call bricks and mortar companies that clearly have to make get on the path of digitization, to digitize their processes in order to make it easier for everybody to then basically get access across the board. And so across the way, we're basically investing in those two. And what certainly I can say from our investments to date is, when we look at the entrepreneurs who are what we call digital disruptors, we've invested. We've got an investment in a company called Jumo, which provides access to credit and savings across Africa. We've got an investment in Bima, which is access to insurance across Africa as well. And also, we're also an investment in World Remit, which is a remittance provider. In addition to that, in Ghana, we're invested in MyLife, and in Nigeria, we're invested in ARM pensions. So that's just to give just kind of how broad it is. But ultimately, what they all have in common is that the idea of digitization and digital acceleration in order to improve the ability to reach every consumer, regardless of what their income is, and to bring down that cost of service. And I think in the context of COVID or post-COVID, what we've seen is an acceleration of that digitalization process. And in that context, clearly, that we will see some permanent changes there. And what we're kind of seeing is going forward, as we look at our investments and also expanding our portfolio of investments, we actually see that in Africa in particular, it's that junction between investment in people and investment in investment opportunities that are clearly going to lead to sustainable change over that time. And on the investment in people, it's essentially access to skills, access to education. And then when we're thinking about the opportunities as well as financial access, it's it's about access to off-grid energy, so renewable energy, which also contributes towards climate change. It's climate smart agriculture, which clearly also kind of address it in a continent like Africa, where something between 60 and 70% at least do make some living from agriculture, or certainly produce their food from agriculture. You can have that basically start to kind of create major opportunities. But ultimately, financial inclusion and access to digitization and connecting people to markets, and people to the institutions who are lending them money, so that they can use big data analytics, and banks can then include that retail, and in that package that low cost, that low income consumer will be important. I'm going to close off now, but one of the key objectives that we're extremely proud of is clearly what we've seen, especially with the digital disruptors, is the ability of very, very micro enterprises who own no major assets are able to borrow just by use of their digital data, mainly their mobile phone data. And over time, we've actually seen that the cost of risk for that particular customer segment, despite lack of collateral, is actually pretty low. We generally basically find that the default rates are substantially lower, and as people borrow more and they expand their businesses, they're able to borrow at lower and lower costs. So they actually developed a credit score despite not having any collateral, and that I hope will basically be something that we can scale. So that, you know, as we get to a point where, you know, as we get to a point in by 2050, or actually probably 2030, which I know is Africa's vision to basically have full connection across the continent, we'll basically be in a position where that is available to most of the continent.
Well, many thanks, Karima. It's very interesting how you painted, of course, the acceleration of digitization in Africa, and we have seen that particularly in the COVID context as well over the past year. And you know, the idea that you know, how we can reduce costs to be able to reach, you know, the people who were completely out of the formal financial system, whether they were underserved or even served through the informal way. And it's certainly, there's a huge opportunity there, and it's interesting also to see how there are opportunities also related to you know, energy, for example, through the off-grid and pay-as-you-go approach and we have seen that expand in many markets in Africa. Maybe I'll come back to you later, because I'm very interested to learn a little bit more about how you integrate some of these, you know, social, you know, considerations into your investment processes, what you really look at into the companies. And also, you know, yes, we're talking about, you mentioned you call them the digital disruptors. You know, a lot of them are very innovative and they're doing wonderful things, but there's also the risk element to it. So how do you risk and try to crowd in, you know, other private sector, institutional investors, the DFIs, of course, that now increasingly have a stronger mandate on sustainability. Thank you very much. I would like now to call Hajara Adiola, who, as you know, is managing director of Lotus Capital. Hajara comes to Lotus Capital from UBS Warburg, where she was a director heading their local Islamic finance desk. Prior to joining UBS, she was a convertible bond research analyst at BNP Paribas in London. She has over 20 years of international experience in research and analysis, investment management, and corporate finance. I'm very, very pleased to have Hajara with us. Hajara, you have the floor now.
Thank you very much, Abdelkader. Good afternoon, and thank you for inviting me to join this wonderful panel to discuss ethical finance and sustainability, which is right up my street. I work for Lotus Capital. Lotus Capital is the pioneer of Islamic finance in Nigeria, and our mission is to provide alternative ethical investment solutions. You know, so I mean, for me, I'm going to just try and touch on the links between Islamic finance and ESG and sustainability. Islamic finance, for those who don't know, is based on some higher social objectives. It prioritizes financial transactions that are supported by genuine economic activity and promotes value addition. It encourages sustainability by prohibiting investment in activities that are considered harmful to society, such as tobacco, alcohol, pornography, interest or usury, and so on. Wealth as poverty in the faith is considered as a test for the rich. You know, so how you earn your money and crucially how you spend it is very important. Success is determined by investing sustainably and positively, and also helping weaker members of society. And I'll bring that in, because I think the social aspects through some of the Islamic finance structures, such as zakat and endowments, is also important. The critical thing that I've noticed in my own 25 years in investment banking is that empirically we've seen that it works. Over various cycles of financial crashes, we've seen that the Islamic finance model is much more resilient in the market. So where is the convergence or alignment between Islamic finance and ESG? ESG and Islamic finance have a shared philosophy, in my opinion, of integration and interconnection versus alienation or fragmentation, which is the conventional wisdom. Conventional wisdom tries to compartmentalize or separate or alienate. Here is faith in one silo, here is finance, here is governance, here is environment and climate, separate. What ESG and Islamic finance both strive for is advocating for integration, a holistic and ecologically wholesome approach to everything. So you cannot separate your faith from your finances and ecological impact, and therefore you cannot separate fairness from finances, you know, and social justice. Poverty, education, health are not standalone issues. Poverty or prosperity is affected by climate. I think Jules mentioned in his remarks about Lake Chad, which over the last 50 years has shrunk by 90%. One of the most current topical issues in Nigeria, for example, is the frequent confrontations between pastoralists or herdsmen, as they're called, and settler farmers for control of water. This is almost a direct consequence of the Lake Chad, the climate effect in the Lake Chad, you know, shrinkage. You know, as the waters dried up, so did the livelihood of fishermen and farmers and even the herdsmen, and then they have to come further and further south looking for pastures for their, you know, for their flock. So these things are all you know, interwoven, and it requires, you know, poverty alleviation requires climate, it requires environment, it requires education, it requires infrastructure, and it requires health. So how do we meet our economic, social, and environmental goals without kicking the can down the road? You know, we believe that structures like Sukuk in Islamic finance are just like green bonds. They're structured to deliver a result and be engaged in a specific and well-defined economic activity that is ecologically sound. And that is what I find exciting. I've been involved in the last 4 Sukuk issuances in Nigeria, one by a sub-sovereign, Ocean Sukuk, in 2013, which was used to build schools. And then since 2017, 2018, and 2020, the federal government has issued 3 successively more successful and larger sovereign sukuks, which have been used to build economically viable roads for Nigeria, across the whole of Nigeria. And it's been really an amazing, you know, an amazing project. The other thing I'd like to say is that one thing I think Islamic finance needs to do, we've used negative screens, just like ESG, but in a different context, to try and avoid socially harmful investments. But I think we need to move to more intentionally and actively seek out sort of positive screening. So just as you have Sharia compliant investments, you're now going to have ESG compliant businesses. You know, and so ESG is in harmony with Islamic values, based on you know, investing in objectives that minimize harm and maximize you know, benefits to society. We've also had, as mentioned by the keynote speaker, the Nigerian government in 2017 issued green bonds. They have a green bond program. And interestingly, it was used for renewable energy projects and afforestation projects, including providing energy to universities and hospitals, which again is a sort of like double or triple you know, benefit. And we've seen in 2014, the World Bank funding the Gavi vaccine program through a sukuk, with the World Bank being the treasurer of that issuance, and was very successful and very and oversubscribed. I think Islamic finance is a bit wider than ESG, and what I see in the future and what I hope for in the future is an expansion of Islamic finance and investments to expand to include ESG considerations. Because whilst I may not invest in an alcohol business, for example, the total ESG consideration is not taken into account. So we need to go into whether it's labor issues, environmental issues, and social issues, and take that into account. And I'd also like to see in the future an expansion of ESG to exclude the sin sectors. Because whilst a company may be considered compliant from an ESG perspective in terms of no environmental or social impact, it may be an alcohol company, for example, which may be harmful in a different way. So I believe in the future we may see some convergence, and at some point they may just end up, you know, being one and the same. You know, and I think that would be a better world. I think with that I'll just you know, stop my comments, and I'm happy to answer questions on any specifics going forward. Thank you.
Thank you very much, Hajara. Thank you. You've nicely highlighted, you know, the similarities between Islamic finance and of course sustainable, responsible, and you know, impact investing, and you know, everything that takes into consideration ESG, and how there is you know, a natural tendency, you know, to converge in many ways, and there's also, you know, this historical connection as well. And it's interesting that you brought some actual examples of how And perhaps, that is something that's going to evolve over time of the considerations of ESG into Islamic finance. And then, the other way as well, seeing how Sharia compliant principles could then be applied to ESG considerations and dimensions as well. So that's very interesting. We have a little less than 15 minutes left. So I think what I would like to do now is I want to circle back to Deputy Governor Elsie. Deputy Governor, in your opening remarks, you highlighted the steps that the Bank of Ghana has taken in developing and implementing sustainable finance. I'd like you to maybe expand on that more, just to give you a chance to talk about the interesting work you're doing in that dimension. But of course, climate risk is one important dimension. There is also the social and governance considerations as well, particularly governance, which is usually a point of departure for sustainability, in which sustainability is really core and part and parcel of good governance. And of course, when it comes to the banking sector, that is important to create the trust and confidence in the sector. And then there's also the social implications. And I know that you have been a very strong advocate of applying gender lens in policy making, looking at gender issues, but also looking at financial inclusion. Could you maybe touch on those points, particularly and how you're looking at applying monetary policy? Or how the monetary policy is really going to apply these different social considerations. Perhaps because of the interest of time, maybe around 3 minutes or so. Sorry.
That's hard because I started with a very brief remark at the beginning, so I was hoping to have more time later. But anyway, the sustainable banking principles I talked about, they were the Bank of Ghana's way of sort of creating an enabling environment for the banking sector to lead the transition to a greener economy. It comprises 7 principles. I must add that we came to do this work really with technical assistance from the IFC. So we need to give them some credit for that. But it sets out 7 principles, starting from how banks would identify and measure ESG risks, as well as then how to put in place measures to ensure that their own internal operations minimize their carbon footprint, which is a very important aspect for us, as well as how they can use their market power and their lending capacity to support the transition to a greener economy. 2 out of these 7 principles deal with gender equity within the workplace, as well as within the bank's customer base, and then also deal with financial inclusion. And what we're saying there is that the transition really must be not only to a greener economy, but also to a more socially equitable economy. And the government of Ghana's key economic growth paradigm is really to promote a socially inclusive economic growth agenda. And so this really is to support that, also in line with the SDGs. And then ultimately, the 7th principle is reporting. So the banks are going to have to report not only on their ESG risks, but also how well they're complying with these principles. So what we try to do is not to leave it at the option of Bank A or B. And I like the fact that we have Mr. Mohammed's team in Nigeria who are really showing leadership in this area, but we wanted to make sure that the entire sector was doing this. And so that's how we came by this. Now, for now, the 7 principles are being applied to banks' operations in 5 key sectors of the economy, which is the agriculture and forestry sector, the mining sector, the oil and gas sector, the real estate and construction center. And really, we believe that these are really the key pillars of the economy. And if we could get, and also the fishery sector, if we could get them to apply these in the credit administration, et cetera, we believe that this will make a real push for helping to promote sustainability and ESG more generally. What we also did is to provide sector guidance notes So we don't only have the principles, which we have launched and the banks are working towards complying with, but there are sector guidance notes for each of these 5 sectors, so that everyone in these banks, regardless of their portfolio and their roles, understands really how they are required to implement these principles to make a difference. What we're doing now is for example, as regulators, developing the reporting templates, which the banks are then all going to use to report on their ESG risks as well as their compliance with the principles. And then we're supporting the banking industry with a lot of capacity development, thanks also to the IFC and other consultants, helping the credit officers, helping the boards of the banks and the CEOs and the C-suite level staff to understand really what changes are required to make this happen. So we make this really the cornerstone of governance within the banking industry. We expect the banks, at the level of their boards, at the level of shareholders, at the level of management, to really understand what it is we're all working towards. And we it's early yet, but we're really looking forward to this making a real change in Ghana. Thank you.
Thank you very much, Deputy Governor. You have mentioned a lot of initiatives here, and Ghana is at the forefront in the region when applying sort of a clear, sustainable finance roadmap that is also clear for the banking sector to comply with, whether it's the ENS, environmental social risk management practices, whether it is reporting on ESRM. Just a quick follow-up question in terms of partnerships or looking at global initiatives. We've seen, for example, the European Union are pushing with taxonomies of eligible sectors, and you mentioned those important sectors, of course, in Ghana. How are you going to sort of well, first of all, in terms of partnerships, are you is the Bank of Ghana looking to, for example, see what other sort of central banks through the network of Greening Central Bank, for example? There's a lot of initiatives there. And what are you thinking in terms of incentivizing green bonds, green investments? We've heard earlier about the green bond initiative that was mentioned by Boason. What are your comments on that area?
Okay, I'll start with the last question. So as I said before, we hope that by banks implementing these principles, banks are themselves going to be more eligible to tap into the global pools of ESG finance, right? So we do hope that banks in Ghana are able to issue bonds, really, to investors around the world. But also, we are supporting the Securities and Exchange Commission and the Ghana Stock Exchange to come up with guidelines for the issuance of green bonds. And the IFC has just entered into a partnership with the Securities and Exchange Commission, which is our sister regulator. And we're looking forward to developing a local domestic green bond market, right? So not only is the government of Ghana thinking of issuing a green bond, but then we believe that the corporate sector should do that. And the banking sector is primed really to invest in such bonds. So that's one way we're doing it. In terms of partnerships, we're not only partnering with key stakeholders here. I talked about cooperation with the Banking Association as well as with the Environmental Protection Agency. We are also a key member of the Alliance of Financial Inclusion, AFI, which also has mainstreamed the transition to a greener economy into its financial inclusion work. I mean, much of what Jules mentioned earlier on. So we see financial inclusion and gender inclusive finance as a key driver of the transition to a greener economy, and in particular how we can empower with financial inclusion SMEs, women-led businesses, the youth, and all of that to be able to make the adaptations that are required to a greener economy. So we're very much a part of that, and we're leading in that regard. We're also a member of the Financial Stability Board's Regional Consultative Group. And as you know, the Financial Stability Board really has come out with its own thought pieces in terms of how regulators and central banks can really help to transition to greener economies. And so we're very much in the middle of that discussion as well. We have made overtures concerning the network for green in the financial system. There hasn't been a policy to join yet. We're still trying to explore membership, but we're sort of in the middle of international discussions also about how can we be more involved in the international discussions on this as well. Thank you.
Thank you very much. That's a very, very deep insight, and also thank you for framing the topic from bringing a regulatory consideration into this very important topic. So I'm very conscious of time. What I'd like to do now is probably calling the rest of the panelists perhaps to in a minute or two, really. Moving forward in the next few years, what would be your top priorities as you continue to develop sustainable finance and ESG frameworks? So I'll start first of all with Garba in just a few words. I think you're on mute, Garba. Oh, it seems we have lost him. We'll try to come back to Garba. Let's, Jules, if we can hear from you in terms of your priorities when it comes to, in the next few years, when it comes to really continuing this development of sustainable finance. Well, looking at from your perspective, obviously SMEs and focusing on green SMEs. What are you going to look at, and what are your priorities moving ahead?
Yes, sure. Yeah, so the priority is to develop the thematic kind of approach as we are dealing with the financial institution. Excuse me.
I think we might be hearing from Garba. Garba will come back to you once we finish with Jules.
Yeah, so as I was saying, at AGF, we have launched 3 specific windows.
It seems we have some technical difficulties with. I'm not sure if it's Garba. Okay, go ahead, Jules. You go ahead. Let's give it a try again. The floor is yours.
Okay, thank you. Yeah, so what I was saying is that at AGF you have 3 specific windows. The gender window, this is AFAWA, the green window, and the COVID window. I think what I've learned today is that maybe on top of those 3 windows, we need to add another window. Thanks to Ajara, is the Islamic window. So definitely I will get in touch with her to see what is possible to do, like to see how AGF can run Lotus, to see how we can develop also the Islamic window AGF.
Our apologies, we still have those technical difficulties. Okay, that's
yes. Sorry. Yeah. So today the gender window is moving very well. We have received a lot of support from different DFIs, from different donors. I think, and the next step, when we talk about also the green window, I remember we did a country launch where we went to 4 countries in Africa, and Ghana was one of the very supportive country. So we did a green conference in Ghana. That was in 2019, and it was very successful, where we were able to mobilize 30 banks and more than 500 SMEs to understand what are the challenges when it comes to climate finance, and the result there was like was very good. Yeah. So in terms of priority, as I said, it's gender, COVID because of the current context, green, and what we need to explore now is the Islamic window that we have to work on definitely. And Adjara, I'm sure, will be a very good help. Thank you.
Thank you very much, Jules. We're quickly running out of time. I'll give a minute for each to Hajara and to Karima. Let's start with Karima. Any last words about future priorities?
Yeah, I mean, I think I kind of outlined them in our strategy. Our future priorities is essentially when we look across Africa to basically ensure that, especially post-COVID, our top-down is delivering impact. We currently reach 200 million customers with goods and services across the continent. 160% of those are people who were unserved or underserved. And so when we look going forward now, I think the kind of key thing is when we look at Africa, we think, well, by 2050, we're going to have 1.2 billion people. Half of those people will be under 25. And then, and then we look even globally, something like a third to 40% of the youth in Africa will something like a third to 40% of the youth across the globe will be from Africa. So it becomes incumbent on ensuring that we have the people skills, the education, and in particular, as we're looking towards investment, actually seeing how we tie that with the underlying need for a digital economy, as well as the kind of key sectors that will mean that most people have got access to their essential services in a way that still means that investors will still get a profit, will get their profit, and we, on the other hand, continue to measure our impact from ESG to the impact that we sought at the beginning. I forgot to mention earlier on that we are actually one of the early signatories of the IFC operating principles for impact management. So I think being able to find baseline on your social impact and delivering and being able to follow that through with investors is important. At the same time, delivering financial returns. So for us, it's about that top down, making sure that we're making a huge difference to the middle classes and the low income consumers across Africa who are underserved, as well as delivering profit and social impact reporting for our investors.
Thank you very much, Karima. Hajara, you have the last word, 1 minute.
Thank you. I think our focus at Lotus Capital is financial inclusion, new structures, new innovative solutions, leveraging on digital. We found in Nigeria still only 44% of adults have a bank account. So we've just launched Lotus Bank, a non-interest bank, aiming to still pursue the financial inclusion agenda and serve the underbanked and the unbanked and go retail and incorporate ESG into the Islamic finance principles that drive our organization. Thank you very much.
Thank you very much. And on this note, unfortunately, we reached the end of our session. And apologies to also Garba, who is having some technical difficulties at the end. But I want to thank all of our speakers for this insightful contribution to the West Africa Showcase. This is clearly an important, there's important role to play for all financial players. Once again, and I will turn now to Boason for the final words. Thank you all.
So, sorry, Abdelkader, I will appreciate, even if it is half a minute, please, since I'm back, even if it is half a minute to give.
Okay, we have you back. Go ahead, please. Yeah, you have the final word, please go.
Okay, thank you. I actually just like Mrs. Elsie, actually we summarize effectively what we gave initially, hoping that one will have time to discuss more. But nevertheless, we are doing a lot because we believe today in Stellenbosch, we believe that poverty is an index that has to be eliminated. And financial inclusion is directly correlated to poverty. And if you look at the environment we operate in Nigeria, over 40% of adults are financially excluded. And therefore, our bank decided to come up with a non-interest arm. We have a window. In Nigeria today, we have two types of license, a full-fledged Islamic bank and a window that a commercial bank is expected to run. So we run that window with the hope of getting a standalone non-interest bank. So in running that, we strategically wish to use that non-interest window to take care of financial inclusion. And I think we have achieved a lot of mileage in that aspect. We have done projects in collaboration with other partners. We have done projects in collaboration with Adam Smith. We have done projects in collaboration with GFID, focusing on women, focusing on young adults, and so on. So we practically, because of the absence of time, one may not be able to enumerate all we have done. We have learned a lot of, teen financing, the micro level of the economy. We believe by fixing that area, we will be able to effectively eliminate financial inclusion. So maybe another time we will have time to elaborate exactly what were our gains. We have achieved a lot in that area. So because of time, I would wish to stop here. Thank you.
Thank you very much, Garba, and thank you again for all the speakers. I will now turn to Boason for the final words.
Thank you very much. Thank you very much, Abdelkader, for your insightful handling of that particular panel. Thank you very much to all the panelists. Once again, let me just appreciate all of you, members of my West Africa team today at this International Ethical Finance 2021 Summit. We appreciate your invaluable contributions, Abdelkader, for that particular panel that you've just moderated. Quite a whole lot of issues have been brought to the fore as we all have listened to the non-interest banking. We hold what is going on in Ghana. We appreciate you, Elsie, for what you're doing at the Central Bank in Ghana. Ajara, Adiola, thank you very much, and congratulations on getting that commercial banking for a new non-interest bank in Nigeria and trying to incorporate everything we're discussing about ethical finance and ESG in the entire banking operation. We broadened the landscape here in West Africa, and we'll say congratulations as well. And thank you very much, Dorsouma Hamndou, who is the Climate Change, Green Growth and Sustainability Development Chief at the EFDB Group. We appreciate your time. Abdelkader Benbrahim, the chairman of our panel and the partnership coordinator at Making Finance Work for Africa. We thank you all, the African Guarantee Fund. We thank you very much, Jules, for coming into the conversation as well. So Karima Ola of Leapfrog Investment Finance, great money you have. You have more than $1 billion in the kitty. We're looking for you to do more and intervene a whole lot more in West Africa in terms of ethical finance, sustainability, financing, and funding, and all the pillars and parameters that we'll talk about and the principles that we're taking forward for this particular conference. Let me say thank you once again, everyone, and to the Global Ethical Finance Initiative for putting this conference for 2021 together. I am Boason Omofaye. I'll see you next time. Bye for now.